There is one rule they never tell you when you walk into a bank at 23 years old with your badge and your debt and your ambition. The rule is this: the system does not reward what you put in. It rewards what you are willing to become. Most people find that out too late to do anything about it. By the time they understand the rule, they have already been shaped by it. Their thinking has already changed. Their ethics have already bent in ways they did not notice bending. Their social world has already narrowed to the people who control capital. And the person they were when they walked in at 23 is someone they can barely remember. This is not a story about greed. Greed is too simple. This is a story about a system so well designed that it does not need villains. It just needs time. And people who are ambitious enough to stay. There are 8 levels. Each one has a rule. And by the time you reach the last one, the rules are no longer something you follow. They are something you are. This is what all 8 levels actually look like from the inside. Before we get into this, if this video shows you something about how the world actually works that nobody ever said out loud, hit subscribe and leave a like. It takes 2 seconds, and it tells me to keep going deeper. Now let's get into it. The market opens in 4 minutes. You have been at your desk since 5:47 in the morning. 3 monitors. 1 lukewarm coffee. A stack of pitch decks no one will touch today. You are 23 years old. You have $94,000 in student debt. Your salary felt enormous until you watched what your managing director build in a single afternoon. So you run the numbers. You format the models. You do not complain. You learn to read a 10K filing in 40 minutes. That is not ambition at this level. That is survival. And then one morning you find it? A number wrong. Buried inside your senior associate's model. An error worth $2 million. You stare at it. You quietly fix it in your own file. You say nothing to anyone, because the first rule is this: the system does not reward honesty, it rewards discretion. Your days are 14 hours, sometimes 18. You stop counting after month 1. You watch which managing directors to stand near and which ones to avoid. You do not have power yet, but you know exactly where it lives. You process a $430 million deal from a spreadsheet on the 31st floor. You never meet the client. You never see the boardroom. But your numbers are in that room. Your work is in the deck. And somewhere in that distance, you start to understand the geometry of this. You are the foundation, the part nobody sees, the part nobody acknowledges. The floor is empty. It is late. You look out at the city. And for the first time, you are not thinking about the salary anymore. 2 years later, you are in the room. Not the main room. The side room where associates sit and wait. But you are there. And that is the shift you are structuring now. Junior pieces, but real structure. You draft the terms on $180 million mezzanine financing. You sit across from a CFO for the first time. You explain a covenant breach scenario without flinching because you have run that scenario 40 times in the past week. That is your currency at this level. Preparation, not intelligence. Preparation. The deal. A leveraged buyout of a regional logistics company. It will almost certainly result in operational cuts. You do not model the human cost. Nobody asks you to. You model EBITDA margins and debt service coverage. You present it cleanly. The deal moves forward. You collect your bonus. You do not think about Ohio. You rationalize it the way everyone does. You just ran the numbers. The second rule: proximity to capital is proximity to power. And proximity to power means proximity to decisions you would rather not have made. You start building your own loyalty network. A VP who brings you onto deals. An associate who feeds you information. You protect each other. Not out of friendship. Out of mutual utility. Welcome to the first layer of the machine inside the machine. You are managing people now. Their output, their errors, their hours. A team of 4 analysts and 2 associates. You stop counting your own hours. You think in deal flow now, not hours, not tasks. Deal flow. You close your first transaction independently. A $620 million acquisition financing. European infrastructure in Southeast Asia. Your MD is on the cover sheet. You are on page 6. But in the room, the client is talking to you, asking you questions. looking at you when the numbers get complicated. That is the shift at VP. You are no longer supported. You are a dealer. You start to see the ethical architecture of high finance more clearly now. The target company's pension obligations restructured post-close. The acquiring fund needs a 22% IRR. The pension restructuring makes that possible. You know what it means for the retirees. You do not say it. Nobody says it in the meeting. The deal closes in 11 weeks. Your year-end cut is $480,000. You wire $40,000 to your parents. You buy a two-bedroom in a city where two bedrooms signal arrival. You tell yourself the pension situation was already insolvent. You might even be right. The third rule. At the VP level, you stop asking if the deal is good. You ask if the deal is executable. At this level, that question is the only one left. You are sourcing now, not just executing deals, originating them. Clients call you directly, not your MD, you. Private equity shops route deal flow through you. 3 closings in 4 years. You have never missed a deadline, never leaked information. That is worth more than intelligence at this level. You manage a $1.2 billion book of advisory mandates. You sit on pitches as the senior banker now. Your associate runs the model. Your VP coordinates due diligence. You sell the vision. You sell confidence. That is the product. You start to understand leverage in its purest form, not financial leverage, informational leverage, the knowing. You know which companies are about to run a strategic review before it is announced. You know which sovereign fund is quietly building a position before any disclosure. You do not trade on it. That is not what this level is about. But you know. And the knowing makes you sharper, more decisive, then you lose one. Not because of the numbers, because of a relationship you did not have. A competing MD went to the same private club as the chairman. That is why you lost a $2.8 billion mandate, a club membership. You do not lose your composure. You do not make excuses. You join 2 clubs within the month. The fourth rule. At the director level, the deal is never just about the numbers. The calls come earlier now, sometimes before markets open, sometimes from private numbers. You manage 12 client relationships, each one worth between $3 million and $40 million in annual fee revenue. You are no longer working for the bank. You are the bank's relationship with these clients. That is a subtle but seismic distinction. You sit on an internal credit committee, $900 million in revolving credit, deteriorating balance sheet. You vote yes. Not because the credit is clean, because losing the relationship would cost 3 times the exposure. It is a political decision disguised as a financial one. Every major decision at this level is. You travel constantly. Singapore, Zurich, Abu Dhabi, Dubai. You have dinners with ministers, not politicians. Ministers. These are not business dinners. They are relationship maintenance. The relationship is the business. Capital does not follow returns alone. It follows relationships, political alignment, regulatory familiarity, trust between the right people. The best trade in the world does not execute without that trust. The fifth rule. Your identity has quietly restructured itself around the machine. You do not notice. Nobody does. Not at first. There are 14 partners in the division. You are one of them now. Your name is on the door. Not literally, but in every way that matters. You have carried interest in the fund. Skin in every major deal the firm runs. When the fund performs, you perform. When it does not, neither do you. This changes everything about how you think. You stop optimizing for the annual bonus. You optimize for the 5-year fund cycle. You stop thinking in quarters. You start thinking in decades. You lead a $4.3 billion acquisition of a European energy infrastructure company. 3 months of negotiation. 4 regulatory jurisdictions. 2 competing bids. You run the consortium. Your fund, a Middle Eastern sovereign co-investor, a Canadian pension. The closing dinner is in London. The handshake happens in a room that does not appear on any floor plan. You structure the offshore holding through a Luxembourg vehicle feeding into a Cayman feeder fund. The tax efficiency is substantial. The structure is entirely legal. Two attorneys in Dublin and Singapore have blessed it from every angle. You sign without hesitation. The deal adds 180 basis points to the fund's net IRR. Your carried interest on this single transaction will compound to over $40 million. You stop attending most social events. Not because you are too busy, because the conversations are no longer useful. The sixth rule. Your social world has narrowed to people who control capital. You do not notice this has happened until it already has. 2 calls today. One from a sovereign wealth fund in the Gulf. $7 billion seeking deployment. They want your fund to anchor the deal flow. You are one of 3 firms they will give that mandate to. The second call is from a finance ministry. Not a banker. The minister. You take both calls from the same room. 44th floor, corner office, no trading screens, no Bloomberg terminal. Just glass and silence and a phone that connects you to people who move entire asset classes. You are not in the market anymore. The market is in you. Your positioning, your sentiment, your deployment decisions move price discovery. When you buy, others watch. When you pull back, analysts write about it for weeks. You sit on 3 corporate boards. You advise a multilateral development bank's infrastructure program. You brief a government twice a year on capital market conditions. You do not lobby. You advise. The distinction is real. The influence is the same. The moral architecture becomes abstract at this level. The consequences are too diffuse to feel, too distributed across too many institutions. You do not feel the layoffs downstream. You feel the fund return. You optimize the fund return. That is the system. The 7th rule. There is no outside perspective anymore. You are the perspective. You do not carry a title, just a name. No designation below it. Senior advisor, chairman emeritus. A name attached to a family office. All technically accurate. None of it the whole truth. You are 71 years old, 47 years inside the machine. It has been here longer. 3 central bank governors know you by your first name. Not because of your title. Because the information flows in both directions. Your committee deploys across sovereign debt, infrastructure, equity, distressed credit, and currency carry structures across 14 markets. Total assets under management above $90 billion. The exact number is known to 4 people. You are one of them. You do not trade your position. Trading responds to the market. Positioning precedes it. 2 years before anyone else, you see a currency block facing liquidity stress. You structure accordingly. Not to trigger the event. To be on the right side when it arrives. When it happens, your funds gain. The press calls it prescient risk management. The cost of this level is not something anyone prepares you for. The people you trust number fewer than 10. Beyond that circle, nothing. You have more access than anyone in your life can understand. And you have almost no one to tell. You are too embedded to be removed. The system would cost more to dismantle than to keep. That is not power. That is something quieter, colder, and more permanent than power. A boardroom in Geneva. 4 people. No agenda on the table. No presentation on the screen. You speak for approximately 6 minutes. The room listens to every word. Then you stop. And the room moves. Somewhere in a glass tower in a city that never stops moving. A 23-year-old opens a terminal for the very first time. Badge says, analyst first year. The badge has always said that. It always will. He thinks this is about the salary. He thinks the system rewards what you put in. He does not know yet what the system actually rewards. But he will find out. The terminal blinks. The market opens. And the machine takes another step forward. If this video showed you something about how the system actually works, subscribe. Next week, we are going inside the specific moment at each level where the machine asks you to make a choice you cannot take back. Most people do not realize the choice is happening until it is already made. See you there.